we start with the distinguished labor economist who until recently was interpreting these numbers for President Biden. She is Cecilia Rouse.
What the Department of Labor reported today was that the U.S. economy added about 187,000 jobs last month, which is a robust number. It's the kind of number that I'm confident my colleagues at the Biden administration celebrated, because what we've known is we had the pandemic-induced recession. We saw the fastest growth out of that, but we also know that that kind of growth of 300,000 jobs a month is not sustainable. That's not consistent with an economy that has reached its, whether we want to call it steady state, but it is a naturally, robust economy. And so we've been looking for and anticipating and kind of a cooling. Last year, President Biden had an op-ed. It was, I think, the Wall Street Journal anticipating this. But it's not even just about the president there. It's just that that's what we want to see. That is what the Federal Reserve is looking for, is a labor market that remains remarkably resilient, I will say that. So it is robust, but where we have the annual jobs numbers looking more consistent with just sort of typical turnover in a strong economy.
As you say, remarkably resilient. As a labor economist, have you been surprised, not the snapback after the pandemic, but at the continued robustness? Because 187,000 jobs may not be 200,000, but it's a lot more than you need to have just to absorb the new additions of people to the workforce.
Absolutely, and it's slightly more than you would expect to see with an unemployment rate of 3.5%. And at this stage of the economic recovery. So it has been remarkably resilient. If you think about the changes in the inflation rate over the past year, inflation has come down quite a bit, and yet we've not seen much evidence of any impact on the labor market. So this, for me, this goes back to the massive disruption caused by the pandemic, which affected every aspect of our economy in the U.S., globally. And that it goes to the disruption was on the supply side. We definitely had the robust assistance on the fiscal side, on the monetary side, to ensure that we could get through the pandemic without too much disruption to our way of life and to our economic, our economic health. And that this is an economy that is knitting itself back together. But it has been surprisingly resilient.
We also, I believe, saw a little bit of a reduction in the average hours worked per week. Is that potentially an indication maybe the labor market started to soften a little bit around the edges?
So, again, we want to see a little bit of softening. Right. That's what the Federal Reserve is looking for. It's important that we not focus on any one month's numbers, but that could be a sign that a little bit of cooling here and there. Our unemployment insurance claims numbers remain very low. The job openings numbers remain very high. So we fundamentally have a strong labor market with some signs that there's some cooling as we would hope to see. We've
been through an extraordinary period of time for the labor market, among other markets, because of the pandemic. We now are coming back from that. Is it too early to ask ourselves, are there structural changes, do we think, in the labor market that may last well into the future?
I think it's a little early to tell. I mean, we certainly hope there will be. We do know, for example, if we look at the economy more broadly, during the pandemic, we had the massive rotation of consumption of goods over services. That is renormalizing, but we still see that our services consumption isn't quite back where it was before. So we would anticipate to see, more employment growth there, maybe a little bit less in goods. So we expect to see some of those changes. Here at Aspen, we've been having a lot of discussion about generative AI and technological change and what kinds of changes that will bring to our labor market and our economy. That is going to come very quickly. It looks like it's, if we look at the speed of adoption, that could come very quickly. That could generate some changes. There are changes in our trading partners and what's happening globally. If you look at the Biden administration's infrastructure investments, the chips, that's generating more construction. And so we have many changes that are happening. It'll be hard to see what sticks, what doesn't stick.
You mentioned the generative AI, which has been the subject of a lot of discussion here at the Aspen Economic Strategy Group. And it's early on. At the same time, one of the things we're hearing is it's coming really fast and very broadly,
yes.
In a very broad sense. As a labor economist, what will you be looking at in terms of what we need to do to adjust our workforce for a world of really broad-based AI?
So we all embrace technology, and in our economy and over history, we have all benefited from changes, technological changes such as this generative AI. It can be disruptive in the short term. And I think the hope is that this will be more complementary with labor, meaning that this kind of technological change allows workers to work better, increase productivity, as opposed to being an absolute substitute for labor, so that we see firms using the technology instead of workers. So that is the challenge. There'll be some of both. I think we hope that it'll be more complementary than substituting for labor. But that's what I think we'll be looking for. We saw numbers about what fraction of occupations, in a certain fraction of the labor force, these kinds of technologies are substituting for particular tasks, but not for complete jobs. That may be where it starts. It's hard to imagine that's where it ends.
None of us want to see people out of work. At the same time, some substitution of labor maybe could be beneficial, because if we look at the demographic trends in the United States,
Absolutely.
a lot of the other developed world, in China as well, by the way, has issues. But in the United States, right now, there's a question about whether we're going to have the workers we need going forward.
Absolutely. Again, technological change has traditionally, over the millennia, actually benefited us as an economy, as a society. And we do know we have this headwind where our working age population is expected to decline. We know demographically we're going to have even more retirements, and our fertility rate is low, which means that there's going to be a time when our working age population is smaller than it is today. And having this kind of technological change where we increase the productivity so any one worker is able to do more and produce more than workers today, that will benefit us all and help us maybe thread this needle and nonetheless remain a robust economic system going forward.